Hi traders, this is a daily forecast on Eurodollar. Today is Wednesday, December 8th. This video is created by Finteria Markets. Please check our website. You will find there many interesting tools and services, educational materials, and all the information on trading conditions. We offer one of the best spreads in the Forex market, and our spread on Eurodollar is below 0.1 pip most of the time. So let's start our analysis. I'm going to select the service which is called FX risk aversion. So far we see that the average value is 11.5. It means that the market is in a risk-on mode. So right now, commodity currencies and high-yielding currencies can benefit from the current situation. So these are currencies like Australian, New Zealand, and Canadian dollars, while the safe haven currencies such as the US dollar, the Japanese yen, and the Swiss franc can actually depreciate in this environment. Let's also switch to the currency strength. So here we will see clearly this tendency. So over the last 24 hours, we can see that commodity currencies perform really well. You see the Australian dollar, the yellow line, the dark line, Canadian dollar. So it performs very well. Also, oil is moving higher. Also, New Zealand dollar, finally, it's not that much behind other commodity markets. And here you can also see the clear movement of safe haven currencies. The US dollar is weaker, the euro also, and you can see that the main loser of the day is the British pound. So speaking of euro dollar, actually there was some weakness behind the euro yesterday during the European session. But then basically euro managed to recover, and it was then the US dollar that was much weaker in the second half of the day. So let's talk about the economic calendar. Right now, the calendar is a bit empty. So speaking of today, the main important event is going to be the interest rate decision by the Bank of Canada. So there are some reasons for the Bank of Canada to be more hawkish, because the Fed has actually changed their stance, and they sound more hawkish now. Potentially, Bank of Canada can also sound more hawkish, but of course, it all depends on the outcome, on the comments that will be given on the statement. So this event can actually trigger some volatility on the Canadian dollar specifically. Apart from that, there are no major events that actually gonna affect. This week is actually relatively calm. We don't see a lot of huge movements in the market. And I think the focus is going to be on the CPI data that is going to be released on Friday. So this is the main event of the week. And also next week, we will have FOMC decision, which is going to be the main event of the week. And also, I think it's one of the most important events since the last testimony of Jerome Powell. So this meeting is going to be important because we will have a lot of data. We will have economic projections, inflation projections, dot plots. So that's why we'll have a lot of volatility next week. So let's switch to the technical analysis. Let me remind you that we're trading in the downward channel. Right now, we're in the consolidation area. We're in the middle of the previous correction moves. Let's switch to the hourly time frame. Here, yesterday, we had an attempt to move below 112.60. However, we didn't really succeed that much. So there was a movement about 60 pips, and then basically we returned back to the previous level. So in my opinion, the market is really missing the major triggers and market moving events. So far we're drifting sideways. So that's why I think that in this environment, it's basically not the best environment to trade. So in my opinion, it's better to follow and monitor the key technical levels. One of them for me was actually 112.60, but we returned above this level because before we had multiple touches. So in my opinion, right now, it's better to focus on the level which is slightly below 112.30 approximately, around this area. I think that if there's going to be some market moving events and we have a movement below this level, potentially this can be interesting opportunity to open short positions. For example, on Friday or next week, if the message from the Fed is going to be more hawkish. Otherwise, if we consider selling the optics, I think we need to be very careful in this situation because, first of all, there are many levels located at different zones, like multiple support levels that you can identify here and there. And there's a high likelihood that some of those retests are going to be let's say they will retest and go slightly higher. We will wipe out the stop orders. So that's why I think that a more safe situation, a safe short position would be to consider shorts if we really move above 113.90. So I think that the market will be motivated to wipe out stop orders before moving much lower. So that's why I would generally consider the area around 114. This is a much safer area where we can consider short positions. I'm not sure that we will get there. So I think it will depend on the course of events, but generally I would say that it's either selling the upticks or shorting Eurodollar much lower below 112.30. So that's it for today. I hope you enjoyed this analysis. Please join our Telegram channel and also subscribe to the YouTube channel. Thank you for watching, and I wish you a nice day.